Hello, my name is Victoria Smith, and in this video I'm going to be doing a financial analysis of 3 different companies, Sanderson Farms, Nissan, and Tesla, to answer 3 questions. Which company I would extend a short-term loan to, which one I would extend a long-term loan to, and which one I would want to purchase the equity side of if I had the opportunity. To determine who I would give the short-term loan to, I compared the companies in their areas of working capital, current ratio, quick ratio, and cash ratio. Nissan, with a working capital of almost $3,500, has the highest working capital out of Tesla and Sanderson Farms, who is the lowest at only $363. This shows that it is superior in owning short-term assets to cover its debt. Sanderson Farms has the highest current ratio of 3.46, making it the best at paying off its obligations. However, at 1.66 and 1.52, Nissan and Tesla have ratios that are decent in their industry. Sanderson Farms is the most liquid with a quick ratio of 1.92. But in this ratio category, all 3 companies are very similar, with Nissan having a ratio of 1.26 and Tesla having one of 1.01. When it comes to the cash ratio, Nissan and Tesla both have less than $1 in cash to cover their liabilities. However, Sanderson Farms has over $1 in cash to cover each of its liabilities. For a short-term loan, I would choose to either lend to Sanderson Farms or Nissan, but the ratios of Tesla are putting it completely out of the question. For a long-term loan, I compared the companies on their total debt ratio and their equity multiplier. Sanderson Farms' low debt ratio of 0.19 makes it the more appealing and less risky option. Nissan and Tesla, who both have ratios in the same range, have a larger amount of debt that is financed by their assets at 0.68 and 0.84. A comparison of the equity multiplier shows that Sanderson Farms, with a multiplier of 1.3, is superior in terms of supporting its purchases of assets through stockholders' equity instead of debt. However, Tesla has the highest equity multiplier, making it the most risky since more of its assets are financed with debt. After analyzing the companies, I would only extend a long-term loan to Sanderson Farms. The final question is which company I would purchase equity in. And to figure this out, I compared the companies on their return on equity, PE ratio, times interest earned, market to book ratio, and profit margin. Sanderson Farms' high return on equity of almost 31 makes it the most profitable company out of the 3. For the industry, at almost 10, Nissan is about average. However, Tesla's negative return on equity is extremely risky. Nissan's 9.91 PE ratio makes it the top in expected earnings and growth, and at 7.78, Sanderson Farms is not far behind. However, the ratio is not even available for Tesla, demonstrating that they are financially declining. For times interest earned, Sanderson Farms has a ratio of almost 150, demonstrating that it is much more able to cover its payment to creditors. Again, Tesla's negative ratio tells investors that it is no longer financially stable. In this category, Tesla has an extremely low market-to-book ratio of 0.03. And while this may seem good that the company's stock is overvalued, it is likely because much of the public believes it is doing very well, when in fact the other ratios demonstrate that it is doing worse than the other 2 companies. Nissan has the closest market-to-book value, and Sanderson Farms appears to be slightly overvalued at only 0.46. Sanderson Farms has the best profit margin at almost 30, which is reassuring to possible investors. Nissan, with a profit margin of about 5.5, is in the area of a typical automotive industry. Again, Tesla is demonstrating that it is not financially secure, with a negative profit margin that shows that it is actually losing money. After reviewing the various equity ratios for each of the companies, I would most likely want to purchase equity in Sanderson Farms, as its ratios are the most appealing to investors. This has been my financial analysis of the companies Sanderson Farms, Nissan, and Tesla using the various short-term, long-term, and equity ratios. Thank you.